Alright, okay. Yeah, haven't uploaded for 2 weeks, but hopefully we're back now. Yeah, apologies for that. Someone did say increase your mic volume, so I think I've done that. I just don't want you to hear my breath or anything like that. So hopefully it's not too loud, and if it isn't louder, then I will 100% increase it next time. But anyway, last time we spoke about range and control, and we're gonna add to that today. It's gonna be really simple, probably like a 5-10 minute video. And it's all about being, obviously you can see from the title, it's about being flexible with time frames. So what I mean by this is we're going to be focusing on range and control. This is the key. This is what we're going to be focusing on, range and control time frames. But we can be flexible with our entries. So in the last video, I spoke about for range to expand. So let's get this out and recap. For range to make a high high, let's say range is H4. Oh, piss off. No, that just looks ugly. So for range to make a high high, let's say range is H4, range equals H4, that means control will be H1. For range to expand from here, we must observe a control breakout, like a breaker structure to the upside for range to expand, okay? But this episode is more about like when you're entering, you don't have to wait for control. You can enter before control breaks to the upside, and that's just being flexible with time frames. So we're going to take this example of range and control being H4 and H1, and then let's use one below, so that'll be M15. Okay, oops, equals. Right, okay. So let's say H4 makes a high low, and just put that there. And then let's say our H1 structure is like this. Boom, 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 boom. Hopefully this makes sense. And obviously we can see that H1 structure is all the way up here, so no one's going to wait for H1 to go all the way up here and hope for a pull to, like, if H1 is really far away, then probably price is just going to do this, and it's never going to give you an entry in terms of break structure and pullback or whatever. So this is not ideal. So this is where being flexible with time frames comes in. If you're trading a H4, like you, oh my god, if you're trading H4 and you want to buy from these levels, you don't have to wait for a H1 break structure before you can buy. You can buy off M15. So let's say M15, we get some sort of breaker structure. It's just a reversal pattern, and this is the most basic form. Like I said in the last video, you probably want to wait for a QM, which will have liquidity feeding in to make it high probability. But there are breaker structure without liquidity works with specific context, where if the rules are met, a breaker structure without liquidity works. Like, it's very high probable, but there are specific requirements for that setup to work. So for now, just use a QM because that would be high probability. But like I said, break structure does work on its own. But for the sake of this, I'm just going to use break structure. But it is a reversal pattern that you can enter with. Like I spoke about SMT as being one. So you can enter on like an SMT, but yeah, obviously not for now. I'm just going to enter on a break structure. So let's say we entered on an M15 break structure. As we can see, as we know from our previous video, range and control, well, if we're entering an M15, M15 is control, and that means H1 is range. But we're targeting H4, okay? So technically, this M15 break structure only equates to a H1 retracement. If we go back, this is our H1 structure. H1 structure is still bearish. So essentially, being flexible with time frames, yes, you can enter on M15, but M15 does not equate to a H4 expansion. Essentially, what we have to do once we've got this entry here, we have to observe at H1 levels. Does H1 break to the upside? If so, we can hold this trade with confidence that our H4 is now going to expand, because if h1 breaks to the upside, that confirms a h4 expansion. But if we get to these h1 levels and start to see distribution, then essentially what can happen is these M15 buys can play to h1, and if we see distribution here, h1 can sell off and take us out. So it's really important to understand that just because we've had an M15 break structure here, or a reversal pattern, or whatever you entered on, it doesn't mean h4 is going to expand. We have to observe at h1. We have to understand, like, you have to go from, okay, we've entered M15, that's cool. Now, how do we manage this trade? We have to observe at our h1 levels. Does h1 break to the upside? So you're essentially, you can partial here, you can hedge, and you're just observing for that h1 break structure, essentially. Hopefully I've made that very clear. I feel like I've repeated that 50,000 times just now. So yeah, I was going to say something else then. Sherbet. But no, let me just recap. So yeah, we've had M15 entry, and you're essentially, you're just monitoring at this H1 level. So it's essentially, this is a really easy way to play it. Oh, that's what I was going to say. So yeah, basically, a lot of people when they're trading, before they've taken a trade, they're worrying about the outcome of the trade, and that's obviously not what you should be doing, because people are worrying about, before they've even taken this entry, they're worrying about how much money is this going to make me if it gets to here. Is it a 1 to 10? Is it is it like, you shouldn't be doing that. You should focus on the entry and then managing that trade. The outcome will take care of itself. We're not worrying about the outcome. If we manage this trade successfully, the outcome, yeah, it will take care of itself. We're either going to partial here and it's going to reverse and we've still made money and we're going to have a break even, or it's going to come we don't care about the outcome. You never know the outcome before a trade happens, so there's 0 point in obviously worrying about that. So always focus on the entry. Is this a valid entry? Does this meet our requirements? Is this a high probable entry? Does it make sense? And then once you get in the entry, all you should be focusing on is managing that trade. You should play price level by level. You shouldn't be, oh, we're in the trade now, let's just hope and pray it goes to H4. No, you should play level by level. You should now, as soon as you've entered that, you're thinking, okay, let's observe this H1 level. If this H1 level plays out, where is price going to go? And yeah, you just, what do we want to see at this H1 level? Obviously it's M5, M15 distribution that can cause here, but let's say this is kind of stacking, this is where the fractal nature of the market comes in. Let's say we get an M5 entry here. Well, for H1 to get to H1 and we're entering at M5, we're going to have to observe at M15. Does M15 break down? But obviously you're in this buy, so yeah, you obviously wouldn't want this to get taken, but that's the whole thing. M5 entry here. Well, for H1 to play to H1, we're going to have to break M15 to the downside. So hopefully that made sense. But yeah, just focus on playing level by level and understanding that, okay, we've got this entry now. This is where we take partials, this is where we observe, and we're looking for certain criteria before taking the sell, but the sell might never occur. It might just blast through and go to your TP, which is obviously what you want. So I have things to say, but then I carry on talking and I forget what I'm going to say. God, I haven't done this in like 2 weeks. But yeah, hopefully that makes sense. I'm going to show an example as well, but I'm just trying to remember what I was thinking just now. If I remember, I will go over it. But I think that's pretty much it, to be fair, in terms of time frames. So, oh, I just remembered it. Yeah, I'm not going to waste too much time. So I'm going to show an example, okay, on this pair. So I'll just move that to the side. Actually, I'll get rid of that. Okay, so here we can see that this is this is an example. So we have a low high to a low low on H1, working with H1 structure. So H1 is our range. H1 equals range. Oops. And also working with structure like this, it gives you context. It gives you, this is why we're pointing out specific levels and prices, why we're pointing out this order block and not an order block up here, because structure gives you a range to work with. It gives you levels to work with. So it adds context. We're not just pulling something out our arse and saying, oh, this is why we're using, it has specific reasons why we're looking for certain levels, which is why structure is so important, and it's why timeframes are so important, because now we're at H1, we know what we want to see at this level. We either want to see M15 break to the downside, or we can be flexible with our timeframes. We can enter on M5 or M1. But if you're entering on M1 at H1, you're going to have to break M5, then M15 in order to get to H1. So the more time frames you go lower, the less probability the trade is going to play out, because you have more time frames to break. So just think about that when it comes to high probability. If you want to be in a high win rate, then you should be looking for either entering on control or one below. But yeah, that's what I would stick to personally. I do go lower sometimes, so the lowest I'd go is like on H4. If there's a specific context, I would enter at M1, but very rarely. It's mainly M15, H1 at H4 levels. But anyway, we're working with H1 structure, so H1 is range, and M15 is obviously control, which is essentially we want to see an M15 entry. But like I said, if M15 is too far away, then we can enter at M5. So one below is going to be M5. So if we enter at M5, once we enter, we're going to be looking for our M15 levels. We're going to be observing at M15. What happens at M15? Does M15 break to the downside, etc., etc. So if we go lower, for the sake of this video, I'm not going to go over why this is a specific structure point, but you'll learn that in the next video. This is going to be about 5 videos. Just understand for now that this is your M15 structure point here to here, and we've played into that H1 level. And obviously, at this H1 level, M15 structure is fairly far away. There is an entry over here, but let's say you wanted to enter within here. Well, we know our M15 structure is still bullish, so H1 sells to this low are obviously not confirmed yet. Obviously in hindsight we can see eventually it happened, but in real time, let's imagine we're entering on M5. So let's see, we've played into our H1 levels and we're observing M5 structure. M5 is high low, high high, and now we've broken structure to the downside. So this confirms at least an M15 retracement to key levels, and then if M15 breaks, it's going to play to H1. So we can see here we have, there we go, just draw the order block. After the M5 breaker structure, we pull back into the order block. It doesn't matter, I'm not really focusing on the entries right now. I'm more trying to emphasize how you play this level by level, how you work with the time frames. So now we've got M5 entry. That means as soon as we enter, our focus goes to M15 levels. We're observing down here, do we see any accumulation? If so, we can hedge. If we don't see any accumulation, that's a good thing. And M15 breaks, that means H1 is now going to play. You can see as soon as M15 breaks, price pulls back and heads for H1 TP. So essentially, this can be your entire model, okay? Range is the range you're working with. If you're entering at one below, which is that one below control, then after you've entered one below control, you immediately go to control structure and observe. You're observing at control structure. You're looking for reasons to hedge. You're obviously going to partial here, and yeah, if control breaks, now you can be confident that one below is going to go to TP. You see, as soon as we break M15, one below goes to TP. So you've got M5 entry at H1. You're looking for confirmation at M15 levels. Does M15 break? Yes, we're going to go to H1. If not, then look for reasons to hedge. So hopefully you can see that it's pretty clear. And yeah, it is honestly that simple. Obviously it's not easy, but once you get really good at identifying structure points and you get into the flow of time frames and understanding where we are in price, you'll be able to trade anywhere. And it's honestly, yeah, like I said, it's not easy, but it is simple. The next videos I'm gonna go for structure, etc., etc. And I'll probably go over a continuation pattern on episode 5 or something like that. And I think that's really everything, to be honest. In the link in the description, I've got a link to my Telegram chat. Obviously, I'm not going to sell anything, not going to do any. I'm definitely not going to do a signal service. Holy shit, I have PTSD about that shit. So yeah, I'm definitely not going to do that. So it's just going to be examples, and it's going to be. I'm going to teach a few more things in there that I'm not going to teach on YouTube, and I'm going to drop a few gems in there. So 100% worth it. There's going to be a lot of examples, and it's just going to use what I've taught on YouTube basically. Really, really stupid, simple shit, and you'll be able to see the entries, and it's just repetition at the end of the day. Everything is built on repetition, so I really, it's up to you. You don't have to join it, but it's definitely worth it, and there are going to be gems in there. Some maybe POIs, things like that, yeah, so on continuations, so 100% worth it. But yeah, the link is in the description. But yeah, this is your essential model that you can trade with this. Like I said, I touched on it before. You don't have to enter on 1 below, you can enter on 2 below or 3 below. But just to understand that if you're at a daily level and you're entering on M5, it's not that probable. Fuck, that's twice now. Fuck. It's not that probable because for daily, to now get to daily, make a daily high, for example, we're going to have to break M50 and H1 and H4, and it's like the probability of all them time frames breaking after an M5 entry is it's just low. Like, so yeah, that's honestly pretty much it, to be honest. Hopefully that's everything. I still didn't remember what I was going to talk about, which is annoying, but if I remember it, then I will mention it next video. But yeah, hopefully this video wasn't too long. How long have we got? 17 minutes. Not too bad, not too bad. So yeah, we'll upload the next one within a week for sure. Probably 2 within the next week because they are really fucking short. So yeah, hopefully this one helped. And next video I'll go over some basic structure. And yeah, as the entry model, like I said, just use a QM, which will essentially be like that. You've got a break structure, you've got the liquidity feeding in to whatever levels, and that can be your entry technique. I'll show you a little example of that just now on M15. Oops, that's got an EU the other day. Not on my charts. Okay, so let's look at this. So we have M5 high low, M5 high high. All this is internal liquidity. So when we play to M5 levels, to confirm M5, we want to look at M1 structure. Okay. Now we're looking for a QM. We can see that M1 has lower low, lower high, lower low. Price breaks to the upside. Now we're looking for liquidity to be feeding in to the low here, and obviously we can see this is just obvious liquidity. You never get anything cleaner than that in terms of like a trend line, liquidity, anything like that. So you can see price pulls back, takes out the liquidity and flies. So that's essentially your QM as your confirmation, and we can see that price did play to the M5 high and beyond. So yeah, just make sure you enter with Q. You don't have to enter the QMs. Like I said, there are way more reversal patterns in that, but that's a solid one, and it's pretty much all you need. So yeah, hopefully this helped. Then yeah, make sure to join the Telegram, and as there'll be lots of examples, won't be straight away, but yeah. Anyway, I think